Greetings and welcome back to the Global Business Channel. I'm Jonathan, your host, and in today's episode, we're diving into a topic that is absolutely critical in financial compliance, namely source of wealth, often referred to as SOW. If you're a compliance officer, regulator, financial services professional, or even someone trying to understand how international AML and CFT rules work, this video is for you. By the end, you'll understand exactly what source of wealth is, why it matters, how it is defined by the Financial Action Task Force or the FATF, where it appears in the Mauritian legislation, however you should refer to your own jurisdiction's legislation, and how it is verified across natural persons, legal persons, and legal arrangements. So let's get into it. But before we go into the agenda, just be aware that we just published a video on the source of funds. So if you haven't watched it, we strongly encourage you to do so. Here's what we'll cover in this video on source of wealth. Number one, the definition of source of wealth. Number two, why source of wealth matters in the context of anti-money laundering, countering the financing of terrorism, and countering the financing of proliferation. Number three, where source of wealth is required under the FATF recommendations. Number four, where source of wealth is mentioned in the Mauritian law. Number five, examples for natural persons. Number six, examples for legal persons. Number seven, examples for legal arrangements such as trusts and foundations. Number eight, challenges in verifying source of wealth. Number nine, best practices for financial institutions. And finally, we'll conclude with a compliance insight and some key takeaways. Let's dive into it. Let's start with the basics. What exactly is source of wealth? Source of wealth refers to the origin of a customer's total accumulated wealth. In other words, how a person or entity acquired their entire body of wealth over time. Unlike source of funds, which looks at the specific funds used in a given transaction or investment, source of wealth is much broader. It paints a full picture of how someone built their financial standing, whether through employment, business ownership, investments, inheritance, or other legitimate means. So, while source of funds answers the question, where did this money come from for this transaction, source of wealth answers, how did this person become wealthy in the first place? Now, why is source of wealth so important? In AML, CFT, and CFP, regulators and institutions want to make sure that a customer's wealth does not come from criminal activities such as corruption or bribery, tax evasion, fraud or embezzlement, terrorist financing, or proliferation-related activities. By verifying the source of wealth, financial institutions can understand the background of their clients, detect inconsistencies or red flags between declared wealth and actual financial behavior, apply a proper risk-based approach, especially for high-risk customers like politically exposed persons, protect themselves against reputational, legal, and regulatory risks. In short, source of wealth tells the story of a customer's financial life and whether it stands up to scrutiny. The Financial Action Task Force requires financial institutions to establish and verify source of wealth in situations of higher risk, particularly Recommendation 10 on customer due diligence, enhanced due diligence measures for high-risk customers, including verifying both the source of funds and the source of wealth. Recommendation 12 regarding politically exposed persons, where financial institutions must establish both the source of funds and the source of wealth of politically exposed persons, their family members, and their close associates. And recommendations 22 and 23 on designated non-financial businesses and professions extends the same requirements to lawyers, accountants, and other DNFBPs when engaging in high-risk transactions. So the FATF clearly signals that source of wealth checks are not optional. They are a core part of enhanced due diligence. In Mauritius, for example, source of wealth obligations are embedded in legislation and regulatory guidance. The Financial Intelligence and Anti-Money Laundering Act of 2002 through Section 17 requires financial institutions to conduct ongoing due diligence and maintain information on the source of funds, equally on the source of wealth when relevant. The applicable 2018 regulations, especially 3, 12, and 15, specify that for higher risk customers, especially politically exposed persons, financial institutions must obtain and verify the source of wealth. And lastly, the FSC's AML and CFT handbook provides detailed guidance requiring licensees to establish the source of wealth as part of enhanced due diligence, or EDD. It stresses that higher scrutiny is required for PEPs, non-residents, and customers from high-risk jurisdictions. This framework ensures that Mauritius aligns with the FATF standards, strengthening its global credibility as a financial hub. Let's now take a look at practical examples of what can constitute source of wealth for individuals. Long-standing employment income and salaries, ownership of businesses over a lifetime, investment income from shares, bonds, or real estate over an extended period of time, inheritance or gifts, sale of valuable assets like property, art, or luxury items, although the last two should be enhancedly scrutinized because arts and luxury items are oftentimes linked to money laundering and retirement benefits or pensions. The key is not just stating the source but providing evidence such as payslips, audited financial statements, property sales deeds, or inheritance documents. For legal persons such as companies, source of wealth may include accumulated profits from legitimate business activities over an extended period of time, the history of the sale of company assets, investment returns over a prolonged period, income from subsidiaries, and retained earnings shown in audited financial statements. Here, regulators expect supporting documentation like company accounts, annual reports, or shareholder agreements. And lastly, let's take a look at examples of source of wealth for legal arrangements, which can be in the form of trusts, foundations, and other legal arrangements. They can come from the settler's accumulated wealth before creating the structure, contributions from beneficiaries or founders, or income generated by trust assets over a prolonged period of time. For the cases, financial institutions must obtain trust deeds, financial statements, and sometimes even background checks on settlers and beneficiaries. And we're not talking about world check here, we are talking on actual background financial checks. So again, it is all about looking at the entire history of the accumulated wealth. Now let's be realistic. Verifying the source of wealth is not always straightforward. Some of the main challenges include customers providing vague or incomplete information, difficulty in verifying wealth accumulated over decades, use of offshore accounts or complex structures, and resistance from high net worth individuals who consider disclosure an invasion of their privacy. That is why regulators stress the importance of a risk-based approach, requiring more documentation and deeper checks only when risks are higher. So how can institutions manage source of wealth effectively? Always apply a risk-based approach. This is ingrained in the FATF Recommendation 1. More checks for higher risk customers. Request independent, reliable documentation to back up the customer's or client's claim. Use open source intelligence and media checks for additional verifications. Train your staff to spot inconsistencies between declared wealth and actual financial behavior. And as we mentioned in one of our last videos on Recommendation 11 regarding record keeping, document everything. Regulators expect a clear audit trail showing how source of wealth was actually verified. As we wrap up this video, let's highlight the key takeaway. Source of wealth is not about ticking a box. It is about understanding your customer's entire financial story. By verifying source of wealth, financial institutions can ensure that wealth has been accumulated legitimately, apply enhanced due diligence where needed, and protect themselves against legal, reputational, and regulatory risks. We've seen how the FATF recommendations and Mauritian legislation make source of wealth checks mandatory in high-risk scenarios, especially for PEPs, trusts, and complex structures. In today's interconnected world, criminals are becoming more sophisticated, which means financial institutions must be equally vigilant. Source of wealth verification is one of the most powerful tools we have to safeguard the integrity of the global financial system. Thank you so much for watching this episode of the Global Business Channel. If you found it useful, please like, share, and subscribe to support our mission of spreading knowledge on compliance, governance, and financial crime prevention. And don't forget to hit the bell to stay updated. Until next time, stay informed, stay compliant, and stay ahead. We'll catch you in the next one. Cheerios.